folks, starting from today's episode, on the last Monday of every month, we're going to try something new. We're doing advisor perspectives, really deep conversations with a SEBI-registered investment advisor. We're going to run this for about 6 to 7 months. We're going to be talking to 6 very seasoned, veteran financial advisors about financial planning, right? Going into some really deep conversations about stuff that goes beyond investment returns, looking at money as a whole, financial planning for all your assets, and a whole lot of stuff. You're going to be really wanting to do that. And please tell us what you think of this idea. You're going to be running this for the last Monday of every month, starting from today's episode. Hope you like it. Folks, welcome to Paisa Vaisa. I'm your host, Anupam Gupta, and I'm really thrilled. This is part of our advisor perspective series to help you make better, smarter financial decisions. My guest today is Lovaii Navlakhi. And we're going to talk about transitions and much more on this episode of Paisa Vaisa right after this break.
Hello. It's been another great week on the IMM Podcast Network. On Simplify, the gang talks about India hosting the 44th Chess Olympiad and its excellent performance. On our new show, Credit Smart with Sybil, Sujata Alawat and Anupam Gupta discuss ways to improve your credit score for a healthy financial portfolio. On All Things Policy, the Takshashila folk talk about the much-debated data protection bill and the developments regarding it. On Habit Coach, Ashton explains why it's important to create a habit of living in the moment while chasing the future. On Cock and Bull this week, Cyrus, Ayushi, Harsh and Antariksh discuss the Russian government's offer to give a cash prize to mothers with 10 children. And on the Life Manifesto, Zarina tells us how using certain words in our language brings about a positive outlook. Hey everybody, as you know, we've been beating the horse for merchandise and you should go and get it now before we refresh our collections. And what's there right now won't be available forever, so go get it now. You can go to ivmpodcast.com, go click on the store link and you'll be able to find the store, or go to beyondfollow.com/IVM and you can go directly over there and pick up the merchandise. Also, remember, if you're following this show or any of our other shows for that matter, please do tell a friend. Social media helps, but not as much of word of mouth. But if you're a social media fellow, then go to our IVM podcast handle on Twitter, Facebook, Instagram, and LinkedIn and follow us there. Also, please do remember to check out all of our different YouTube channels. We have a ton of them now. You can go to ivmpodcast.com/YouTube where we maintain a list of all of these channels. And finally, we'd like to thank our sponsors for this week: TransUnion Civil, Boat Lifestyle, Checkpoint Software, Small Case, and Intel vPro. Thank you so much for making this possible.
And welcome back. Lovaii, welcome to Paisa Vaisa. Thank you so much for doing this for our listeners. You've come all the way to Bangalore, all the way. I believe that you keep on coming to Mumbai very often. Thank you for doing this here.
Most welcome, Anupam. I think it's good that I am apparently the first person on this episode.
Indeed you are.
And as you know, I do everything which I do, it ends up being first. So this is a nice thing to follow.
Let's start from there, Lovaii. Tell us more about this being first, because you are the first certified financial planner in India. Okay,
that is
among many other things. Let's start from there. Tell me.
Yeah, so I think that for me, the whole process of getting into personal finance happened a little bit by chance. A little bit, I would say, happened by design. I used to be with a financial services company was one of the jobs that I did. And during that time, I would, have newer products that came out, and I would go with that portfolio of that product and meet whoever I found and talk about that product.
You're talking about 90s, right?
Yeah, I'm talking about 90s.
You need to give our listeners a sense of the era, because that was very different.
I thought you wanted me to reveal my age, but that's good.
Okay, yeah.
So, in the 90s, whenever I would talk about that product, it was a great product. It was fantastic. It had great features. But back of the mind, I knew that it was sometimes good for certain people and not so good for the others. And I felt that there needed to be, the right product for the right person being offered. So that's something that probably stayed with me. Subsequently, in that same financial services company, we started distributing mutual funds, and we didn't know what the hell mutual funds were again in the late 90s.
First again, I guess.
Yeah. So, one of the mutual funds put out a questionnaire and said, write down the age of your younger child. And when I wrote it down, I said, what a funny question. I wrote it down and they said, this is what you need to invest every month to educate your child. And I said,
Wow.
forget younger one, older one's also not happening. The amount they wanted me to invest every month was more than what I was earning then. And the thought that came to me was, I wish somebody had told me 10 years ago what to do. So these two things probably stayed on with me. I subsequently joined the .com. Had a great time there. As my wife says, got younger during that period. I was just getting into 40s. But the average age there was, I don't know, 18 and a half or 21 or something like that.
First 40 year.
So there were others who were my age. So
Okay.
that was good. And luckily for me, the CEO there, after, running Monday morning meetings for a while, where people would complain about the toilets and coffee and stuff like that, got into, specific stuff on products. And he said, one fine day, called the management team and said, bloody hell, I'm only, doing all the work on a Sunday. Now I'm going to rotate this and you all do the session. So I started doing sessions on Mondays in rotation. And the thing I would ask the team would be, how much money do you have in your bank account? Don't keep so much money idle. Next time say, okay, do little long-term debt investing, start doing SIPs and so forth. And a few of the people from there came to me and would meet me after the meetings and said, I've worked for 10 years. I have many pairs of shoes, but no mutual funds. Where do I invest? So I would ask them, do you have 500 rupees in your pocket? In those days, they were taking cash. I would get them to fill up a form and invest. So the first few set of investors as such came during that .com. The famous, .com crash happened. And along with 93 others, 7 of us management team was pink slipped. We identified who the 93 were. We volunteered to be pink slipped. And then people asked us, those who had invested through me, saying, will you be able to do this? Will you manage this? Will you start something of your own? And I said, no way, but I'll manage. It's a small lot of people. So I started off in that manner. And the first probably month or so, a few of them got their settlement, started talking to me. And a penny dropped and said, wow, this is exactly what I want to do. And at that stage, those two learnings of, doing what's right for client and also trying to educate them helped. And that's how this started.
Now wait, tell our listeners about your firm, IMPL, because it's among the oldest, right? Because you said that I'm guessing that after this incident, when you, let's say, discovered your calling, this would have been in the early 2000s, that's when you actually started a practice of financial planning for your clients, and they were kind enough to pay for you as well. So tell us about your firm, which is International Money Matters, when you started it, and what's been the journey so far, and let's go from there.
Yeah, so one of the first things that I did when I started off was, I had my old visiting cards. I would scratch out the company name and keep the mobile number. Luckily, it was personal. And then realized, okay, I better have a card, in which case let's have a name. And I thought of Money Matters then. And it started off as a proprietorship as Money Matters. And in 2004-5, I think, is when I started visiting, the US for conferences and to meet up clients. And I was thinking of switching the company to, creating a private limited company. And that's when I thought, okay, since I'm meeting people internationally, let's add international. Of course, I looked for the name Money Matters International Private Limited because it had a lower authorized capital and less amount to be paid.
Okay.
But there was Money Matters India Private Limited or Limited at that time. And they said, no, we won't give you that name. So you better put international in the beginning. Yeah. And that's how International Money Matters got formed. And initially, frankly, I never did financial planning. When I started off, it was mutual funds. It was trying to educate people about why they need to invest in mutual funds, etc. And I was learning, frankly, along the way. So happy that the early clients were allowing themselves to be experimented on. And then in the second year, I thought, okay, let me add life insurance because I think protection and risk protection was an important element of wealth management. So I did life insurance, and then somebody told me, oh, there's this financial planning course coming to India, and there's a session happening at the Taj West End, you should attend. I said, what is it about? And they said goals and stuff like that. And I said, oh, this is what I've been doing, but I never knew it was called financial planning. Of course, in a very, very elementary sort of manner. So I went for that and said, oh, this is worthwhile, let me enroll. And so then I became in that first batch of 26 people who had a convocation together. Actually, there were first 2 batches. And that's how I became in the first batch of CFP.
CFP. That's what I was waiting for. The course, and this is the US degree, I guess.
Yeah, so this is actually global. It's in 20 odd countries now. And they approve the countries based on certain standards and education and the process, etc. So the course is common, but if you wanted to practice in a different country which had the course, you have to write the local exam. So essentially the local tax rules and
Corporate
PF
laws
and
or whatever,
those sort of things will be different.
Yeah.
So you better know that, and that's how I did my CFP. And and you mentioned about charging fees from clients early on. In the second year, some of the clients told me I should charge a fee, and I said, why? I'm getting everything from the product. And they said, no, you're doing something more. And my .com days came to my help. So I said, let me write an SLA. So long before SEBI thought of SLAs, I had SLAs with clients saying, this is what you will do, this is what I will do, etc. And started charging fees. And financial planning came probably a year or year and a half later. So in that 2 years later, I then started charging financial planning fees, of course, with a 2-page ragged financial plan. But yeah, I think I've learned along the way.
You've done as good, it's like a backward integration, so to say. Started with mutual funds, added life insurance, then financial planning. Talk to me about the IMPL today, the range of services that it offers, because it's huge. I mean, you've also got international stuff out there. So let's talk a bit about that.
So I think the way I think about it is that individuals all require handholding. Because in situations that you face, you almost always feel that you are alone, that this is something that is only happening to you, it's unique to you. And therefore, the important thing was trying to create some sort of structure. I'm pretty much a hands-off type of guy in terms of managing team. So I don't like to interfere too much. So my thing was that I try and create a process so that it works independent of people and independent of me for sure. Clients sometimes don't like it. They said, oh, bahut bada ho gaya hai, you can't handle me now anymore. But it's not that. I know that the process and the systems that are set will allow for different people to handle these clients. So what I tended to do is that to look at 2 aspects when you get in clients. One is the client who feels that I have only 100 rupees and I need 500 rupees to meet all my goals, and therefore I need some sort of planning. And I think that's the first misnomer. People earlier thought financial planning was for people who had the money. And frankly, financial planning is for people who will help them, which will help them meet their goals. So the 100 requiring 500, that's one set. So I need to know what my goals are. I need to know what my income is, what my expenditure is, where I've invested, what my liabilities are. And then you sort of create a financial plan based on assumptions of returns, of inflation, etc. You build in some scenarios, and so you get I would say, a real global class financial plan, which can also transcend borders. So if there are clients in different countries and there are issues relating to taxation, inheritance, etc., those are things that we would incorporate and do the plan. The other set of clients who might think that they don't require a financial plan. I have money with me. I have maybe 700 rupees and I need only 500. So I want the 700 the way I want. My only sort of caveat to such people is that you still need that 500 to meet your goals. That 200 is extra. So the 500 needs to function as if it's a plan for the goal. The 200, Yeah, as I tell people that you either put it on horse racing or put under the mattress. You can go
Horse
either
racing,
way.
really.
Yeah, because even if you lose it, you're still meeting all your goals, right? So that's obviously the answer somewhere in between,
I
right?
understand.
So you get the people who want to do wealth management. Now, invariably, I think people think of wealth management as a very glamorous profession in the sense of um, I must do exotic stuff. So I must be a Virendra Sehwag in every ball of the match, and I don't have to be a Tendulkar or a Dravid. And I think that that's not true. Each of the Tendulkars and Dravids also have Virendra Sehwag type shots, and the Sehwags have the
Correct.
defense of Dravid, right? So I think it's a combo, and you don't need to do too much of exotic stuff. Ideally, actually, you need to eschew the risk, because if you protect downside, you will make a lot more on the upside. That's what our belief has been. So we tend to look at that, and if once you look at that and you overlay this with financial planning, where the essential essence is essential essence sounds very bad. Where the basis should be asset allocation, which means that I want to distribute my assets and not have too much in any one basket. Automatically, as I increase the range of products that I offer, so I want people to have maybe 10% of their equity investment, domestic equity investment in international. So if somebody has a 40-60 ratio and has 40% in equity, then I would say 4% should be international or 6% should be international. So the answer for everybody is different. So one, it's customized, but we would look at some of this sort of structure and say, okay, 5% in gold, 7% in gold, 3% in gold, in that range again. Look at the shorter term goals and have certain things which are invested safer, and then do the rest in the longer term. And as you move from mutual funds and you want to go into, let's say, portfolio management services, and the minimum amounts now are 50 lakh for an individual manager, then we would say, okay, unless you have 6-7 crores to invest, then it's not worthwhile taking the risk and having too much weightage in a portfolio management service. You want an AIF product that's available, but then if you're 10-12 crores and above, then it makes sense because it's a crore. And international, again, if I was to do $5,000 and $10,000, really I'm not getting too much diversification. So again, if I was to do directly through LRS schemes, then I need a little slightly higher amount. So we do all of these things in terms of planning, protection of risk, looking at the goals, making the investments, whether it is domestic or it is international. And of course, we are always careful about wanting to invest only in regulated products. It's not that we never did unregulated products before. We did burn our fingers with some unregulated products in the past, which was pushed by a lot of clients, which was art. But we said physical art, you will get delivery, etc. So at least you got delivery. Questions were of authenticity and, ability to sell, etc. But yeah, that taught us that, we should just stick with regulated products and not worry about anything which is not regulated.
Yeah. And folks, don't, I know that Lovaii is talking about 5 crores and 7 crores and 10 crores and 12 crores like it's anybody. But remember that things like planning, asset allocation are universal.
No, let me, in fact, add to that. I think in the beginning, people asked me that, are you dealing with HNIs? And I said, no, I will deal with I. I don't know what HN stands for. Because I think every individual is unique. And my learning in the early stage was I would meet a lot of people who wanted to invest. I would spend few hours with them. And then they would say, oh, I checked with my uncle. He said, don't touch mutual funds. You must never invest there. And I said, oh, this is odd. So I wanted, therefore, charging a fee also helped, because then it sort of weeded out people who were not serious. But I think the big ask from them was not how much money you have, but do you have the time to devote to, explain what your objectives are. So do you have that 1 hour of time to sit and, just talk about what your dreams, aspirations are? I don't want to know how much money you have. I just want to know your dreams, aspirations. What sort of issues have you had before in terms of dealing with a financial planner or advisor? Have you ever dealt with one? Why haven't you dealt with? And what really are your sort of worries if you were to outsource this? I think those are important questions to answer. The reason I'm saying larger amounts is that because now we have a larger team, so you also need to ensure and figure out, and I tell this to most other financial planners, is that in the beginning it was, I'll deal with anyone because, wow, I'm getting a client. At some stage, you need to figure out what your sort of true north is, or where are you going to make the biggest impact, or where would you like to make the biggest impact. And we realize that complex situations is something that we do very well. Cross-border situations we do well. People going through transition we do well. Now, not too much of this can happen for people who've just started work. I'm sure there are people who also are facing these issues at that stage, but the numbers are not large enough. And therefore, we think we can make a bigger impact there. But earlier, we still have a long tail of clients who, started early on, maybe just bought an insurance policy, just did some SIPs. In some cases, may have forgotten that they have their investment, and we are trying to now reach out to them and tell them, oh, you have this money, it's grown so much. So, yeah.
So folks, we are spending a lot of time here in making you understand the financial planning process, because if you paid attention to what Lovaii said a while ago, where he said that, it's that your planning is more than just about the return that you get on your investments or which mutual fund you have. It's more to do with your goals, with asset allocation. And one important part of this of financial planning, like Lovaii said, and something that International Money Matters specializes in transition. We're going to cover that right after this break. And that's when you'll understand how financial planning is much more than finding the right stock, finding the right mutual fund, and going for this 10, 12, 15% that people keep on talking about. Financial planning is much more than that, folks, and you'll find out why right after this break.
Previously on Varta Lab. After 3 wonderful seasons, Akash and Naveen went their separate ways in search for glory, comedy, and comedy glory. But all they found is long transit time, bureaucracy, and upset stomachs. Now, after 3 years of collecting stories and hustling,
I can't mention. Bullies. There's no need to overact. Bullies.
Akash and Naveen are back at the lab
Let's do it.
with
Stories, we've got stories. They're a little bit of funny and a little bit of December. You wanna hear them? It's got humans. They're sitting in a box and talking roll at Varta Lab.
And welcome back. Okay, Lovaii, let's talk about transitions. And maybe you want to just, talk about that anecdote that you told me when we had spoken for the very first time about how when you were in the US, you heard of transition and you realized that this is exactly what you want to specialize in and how it's relevant to our lives.
Yeah, so it's a very personal incident that I went through. A very close friend of mine passed away in 2013. 12 weeks in hospital, went to get a checkup done, never came back home.
Oh, that is tragic. That is tragic.
Yeah, so, and the first probably 8 weeks or so, we used to go every evening to the hospital and chat with his wife and, the kids there. And we thought it was a picnic and we thought he's coming back. But it deteriorated. And then his wife, I periodically off and on would do a little bit about his investing. He was a businessman. And I asked his wife whether she needed help with the finances. And she said yes. And we would set up meetings. We would set long meeting time because we said, lots of agenda to cover. We'll do a 2-hour meeting. And we would spend probably 5 to 10 minutes on the agenda. And then we would lapse into memories. Wow. It was a good healing process for me as well. I'm sure for her it took much, much longer. And during that period, I went to the US couple of months later to a conference, the Financial Planning Association retreat. And at that meeting, they had one event called Under the Trees, where different topics, somebody is leading the topic, you all carry your lunch, sandwich, apple and juice.
Literally under a tree.
Under a tree.
So
Genuine,
actual.
actual
not like,
under a
not
tree.
like you're in an auditorium and there's...
No, not in the auditorium. It was open,
Nice, okay.
nice weather, etc. But we sat there, and I sat on this table where this lady was talking about transitions. So I said, oh, great. I had heard her speak at a conference 2 years ago. So I said, yeah, I know this person. Let me go and listen. And there were a few other people around who seemed to have also done something on this program. And apart from what they spoke about, the program, etc., what it does, I said, oh, 1 minute, I'm going through a case like this. And I described and said, this is a, relatively young widow, late 40s. And this has happened just 2 months ago. And I've been, meeting up and setting up meetings for 2 hours and having many things on the agenda. And when I start the meeting, and that's all I said. And they completed the sentence and told me how the meetings would be running.
Wow.
And I said, 1 minute, how do you know? Said, we've been doing this studying this as a science for the last decade or so. When people go through transition, their sort of mind space is sort of fractured. So you're not able to think clearly, rationally. And therefore, you have to have very, very short meetings and very, very pointed agenda items, if at all you want agenda to be discussed. And when I heard this, I said, wow, this sounds great. And then I further understood that whenever you go through change, whether the change is planned or unplanned, your emotions tend to get the better of you. And therefore, you're not in a position to make rational decisions. And therefore, you need help at a time like this. So if you did go through the program and became a CEFT, that is a Certified Financial Transitionist, then you'd have the ability to talk to people going through change and handhold them and pick out only the things which were important to be done at that time, and the rest of the things you could actually postpone.
Wait, let's go a little bit deeper in this and tell us about more examples of transition. Some of my favorites, or rather the one that I find the favorite probably closest to my heart, something that I've also done in the past, is just wake up one day and said, I'm quitting my job. I don't know what I'm going to do, but that's it. I'm done. Of course, nowadays people are smarter. I want to start my own firm and all that, and I want to do my own startup and all that. Is this also a type of transition? And what other transition have you seen your clients in?
So interestingly, Susan Bradley, who started this program, did a TED talk, and in the TED talk, she got everyone in the audience to stand up. Everyone sitting down and started drilling out transition one after the other, and said, if you've gone through this, stand up. If you're now standing up, then put one hand up, other hand up, etc. And, virtually the entire audience had gone through, and sometimes without your knowing it, you're going through it yourself. So let's start. You completed your education and you decided to go abroad for studies. Okay, you then came back and got married, or you took a job, then you got married, then you had a kid. Then your kids went to school and college. Then they went away and you became empty nester. You changed cities. You changed jobs.
Wow.
You went through a divorce. There was a death in the family. You inherited something. All of these are transitions. And at every stage, and frankly, after I've gone and studied the program and qualified, I realized that this impacts me. Even though I know it, it sort of impacts me. At that stage, I don't want to think anything beyond. So when I am caught up in something which is grabbing my attention, everything else is a blur, right? And sometimes there are other things which are sometimes equally important. Sometimes the other person doesn't recognize, saying, what happened to you? Why are you behaving like this? You might notice this with your friends or whoever you meet up. And that's when you realize that, they are going through a transition, and therefore their process of thinking is sort of broken. So every stage like this causes this change. And the program actually started, and Susan was a financial advisor at that time, and someone approached her saying, why don't you give a talk to this bunch of women who are going to get some money out of a class action suit in the US. And when she studied beyond and said, okay, we'll talk to them about what to do with that money, but what happens later, etc., anyone doing any work on it, and there was really zero work happening there. And so she started working on this. She was forced by a lot of her fellow colleagues saying, no, go deeper into this. I think very good well-wishers and friends like that. And she ultimately sold her practice and got down to saying, okay, I will help other advisors who are facing clients who are going through this transition to this. And I think there was amazing work on that.
Wait, what you're talking about sounds a lot like a therapist, that you would have these kind of deep conversations on the psychological side also. Let's talk about the financial side. So when you talk about transition and financial planning, what does that mean? Does that mean, asset allocation, changing stuff, and just...
No, so it's not, it is certainly not psychotherapy. And I think that's the distinction that the CEFT program makes, that you have to have an understanding of money. There have to be money issues that you're dealing with. But we have to recognize the fact that despite the fact that there may be people who are very rational, who may do a lot of analysis and thinking, decisions are normally emotional. The trigger is emotional. So you might do all the analysis as to why you need to invest in a particular thing. But one fine moment or day or whatever, when the penny drops, it's an emotional thing. That now I'm fed up of doing this analysis, I want to action. That's the emotion that's driving you. Or you heard a friend or a podcast talking about certain things and you said, okay, now I'm going to do it. So it becomes an emotional sort of decision to start off. So you have to know that there's an emotional aspect to it. The second thing is that even though, so let me take an example. So in fact, I got referred to, funnily, a psychotherapist as a client.
How about that? That must have been fun.
Yeah, so I obviously, when I did the course, I started telling a few people from my clients that I did this, etc. And some of the people who knew, one of them who knew a psychotherapist who was going through a divorce. And he said that, she might need your help, not as a financial advisor, but actually as a CFT. And this was maybe 5-6 years ago. And I'm in Bangalore, and this person being referred was in Hyderabad. And I said, okay, fine, let's get onto a call. And I get onto a call, and this person is telling me about her life and what she's going through. And then I tell her that, yeah, this is great, but ultimately, we end up doing financial planning, etc. So I need some data. She says, I'm not yet ready to give you that. And she has 2 or 3 conversations and then says, okay, I'm coming to Bangalore for some event, which is at the outskirts of Bangalore. And so on my way back, it's a Sunday, I can, meet you close to the railway station. And I said, sure. And then she says, no, actually, it'll be very difficult. I think you are very far, etc. So she's avoiding. And I said, no, I want to meet you because a face-to-face will help. So I meet her and I say, let's just chat. And she says at the end of it, says, I'm glad we met. So I will share some more. Then I met her once more in Hyderabad. And I think one of the things I learned from the CFT program, which I told her, funnily, a psychotherapist, which I think in many cases she tells her clients this. But the point I'm trying to make is when you're going through this yourself, it's very difficult for you to, self-medicate. And therefore, I think she needed the help. So I told her, I said, one of the tools that this program actually tells you is that you can avoid making decisions. Or there are periods where you can avoid making decisions. Apart, very opposite to what I learned in MBA, saying any decision is a good decision.
Okay.
So they call it decision-free zone. And in that period, one of the tools it says is, can you break up all the things that are worrying you, and maybe take a piece of paper or a chart and write down everything that's worrying you. So I told her actually to do that. I said, you're not sure about the settlement. You don't know about your elder daughter's college. You don't know about the younger daughter's schooling, and then the home that you're living in, and whole bunch of things, her business and her practice and stuff like that. So she put all that down, and then I said, okay, now let's circle out the things which are all pertaining to family. Circle out everything pertaining to your kid, to your business, pertaining to home, and so forth. And just doing that exercise calms you down, because you now don't see 25 things, but you see 6 big topics and those 25 things broken down. The other thing then you start doing is that in each of these 6 major topics, what are things that you have to do now? What are things that you can do, little later? So once you start separating that out, then your sort of attention then needs to go only on the things which are here and now. So let's say you've had a situation of a death in the family, and now you're taking over some of the assets, business, etc. And now you come to 31st July income tax return. Now you don't have a choice. That's something that you have to do now.
Correct.
But many other things you can postpone. You don't have to take that decision now because you're not emotionally ready for that decision. So that's something that worked, and it took almost 2 years before she said, now I'm ready to be a financial planning and advisor client. And all this was gratis, but it was great learning for me to implement the transition.
I mean, here I thought I'll get some advice from you that what if tomorrow like you said, I wish I knew of this 10 years ago. So, and now I'm telling you that I wish I knew this back in 2007, 2008 when I decided to just, quit. What would be your advice to me at that point of time, Lovaii?
So there are a lot of people who are going through this, and a lot of people who think about this all the time. I hate my job, I have to do what I really want, right? So
you get this a lot, I'm sure.
Yeah, plenty of this. So I think from a financial standpoint, you just need to ensure stability, right? You want to make sure that, okay, how long will it take for you to start earning? Or how long will it take for you to think about starting to earn? And then when you earn, will it be 100 out of the 100 that you were getting, or will it be 60 or 40 or 30? You make the estimate. I can't guess for you. And that helps us to work out and say, okay, fine, if you are going to earn 60, then can I sort of put a little pressure on you and say, okay, 3 years after you start earning 60, will it go up to 80? And 5 years later, can it go back to 100? So now I'm working with, okay, these 2 years I'll do nothing. And the next 5 years is a sort of runway sort of time before takeoff, and I'll go back to the same level. Of course, inflation will hit, etc. But at least I have some data. So, and I think the advantage of going to a financial planner is not for the financial planner's wisdom alone. I think the ability or the number of different clients and situations that the planner faces allows that now saying, oh yeah, I met somebody else, or I did deal with someone 3 years ago who had this similar situation. At that time, remember, I mean to myself that I forgot this particular thing, or this was the thing that came in the way. We did all the planning, but then life happened. So I must point out to Anupam now that, okay, remember to take care of this, or is this something that worries you at all?
Wow.
So I think it's a lot of... I think the great thing about this profession is that there's learning all the time.
Yeah.
There's learning all the time. And frankly, before this podcast, I'm just coming from a meeting with a client whom I had 15 years ago. He decided that he will move on to one of my ex-colleagues 2-3 years ago, or 4 years ago. And he's meeting me with his wife saying, I want to retain you for my global advice. This particular ex-colleague is handling the India part, but I want global advice. And I keep thinking I don't have enough. I am 60. I'm going to stop working 5 years from now. My wife says, we have enough. Why are you worrying? And why is he worrying? I said, essentially it's what he experienced when growing up. It's not something that I can change and you can change. And this is I came from same background, similar. I said, but the lessons that you learned at that time and got imprinted on you were different. So I think a lot of that comes from experience. And I think one of the great things the CFT program taught me, funnily, which is not to do with, actually some bit to do with CFT, is listening. And that's also part of the program, that it actually allows you to listen really deeply. They test you for listening, by the way.
Yeah, I'm sure. I mean, a lot of this comes from the kind of stuff you're talking. And folks, that's why we've called this series Advisor Perspective, because there's learning, listening, and so much. No, Lovaii, we are winding up the episode now. What's the most freaked out request you've got from a client? Because the kind of relationship that you have with clients are fairly long term, right? Some might come to you, यार शादी कराना है बच्चे की, कुछ कहीं से कुछ तो ये लेके आओ, रिश्ता लेके आओ, something. Other than, advising on funding the education of a kid, and you've got deep relationships with your clients. What are some of the more hatke requests that you get?
Okay, so I'm not so sure hatke, but I've had questions from a widowed client saying, I've been thinking, do I need to switch my postpaid phone connection to prepaid? Genuinely. Saying, do I have enough? And
Okay.
yeah, so I've had that. I've also had saying, I have 2 kids. My son wants this 10 lakh rupee loan from me for his business. Can you give me good reasons why I can tell him no without him feeling bad about it?
Okay.
Yeah.
This is getting more interesting.
I'm trying to remember, but it's a long memory to go back.
Postpaid versus prepaid, and then how do I say no to my son who's asking
Yeah.
for a 10 lakh loan?
Yeah.
Man, you're like the advisor, you're like the consigliere in Godfather or something.
So I think this allows you to be in that place because it's very deep. I think very often we've had people coming to us and seeking advice whether they should take a change in job. And we've had one client actually who was part of a founding team in India, did a financial plan, and we found that, there was nothing really left to squeeze in terms of expense, but he had to have higher earning. He went back, spoke to the firm for increase. They couldn't. He actually shifted to the Middle East because he had to earn more to meet his goals.
Wow.
So, we do impact lives.
And that's true impact.
Yeah.
You're making, you're really impacting a person at that level, and that's true
Yeah.
impact. Lovaii, last question, so that our listeners have specific takeaways from this episode. What's your, checklist, I would say, that when someone is going out to seek advice from a planner or from an RI, whoever it is, what are the few things that you should keep in mind while seeking advice?
I think first do a lot of good due diligence before you choose whom you're going with. So don't be in a rush, not just because your neighbor, colleague, uncle recommended a person, you need to go and pick that person. So be careful about that. And therefore also know the type of questions that person is asking you so that you know that he's genuine. So the questions that the advisor or the planner would ask should denote to you or convey to you that he's going to care for you and take, as one of my clients says, I want you to take care of me and not take my money. Take care of my money and not take my money. So I think that's a very important piece to know. And what are there similar clients he has dealt with, situations, etc. Similar situations, I would say. Yeah.
So that you can vibe them. And fees, normally, how do they work? Because I think as per SEBI regulations, you have to disclose your fees on the website. Am I right on that?
Yeah, you need to disclose. I think the ones who are RIAs, and once you have conversations with them, you will find the difference between an RIA and somebody who's purely looking at managing your wealth. You will find that they will look at things from a more longer term perspective, and they have to disclose. And I think there is regulation, but there is a good belief in my mind that regulations also will ease out and pave the way for more RIAs to be in business. And one is hopeful for that. Till that time, we'll enjoy the sort of monopoly that we have.
Yeah, of course. Come on. What? Less than 1,500 RIAs for a country which has, about 25 crore households, and I'm sure that's But everyone needs good financial advice. Wouldn't you think so?
No, 100%. I think everyone needs financial advice. Like I tell people that
Good financial advice. Sorry for interrupting you. The financial advice. So कोई भी देता है आज की तारीख में आप YouTube में जाओ आपको 10 लोग मिल जाएंगे. Lovaii, come on यार.
Okay.
Let me say good financial advice.
Okay,
People
good
like
financial,
you.
good financial advice. So I think that there are 3 reasons why you might not need a good financial advisor, and you want to do it yourself. And I know your book talks about that. Number one, you understand how to read finances, understand the nuances, etc. Number 2, you have the time. And not just the time today because you're taking a break and therefore I have the time. Okay, you'll need to have continuous long-term time. And third, which I think you can't manage, which is manage your emotion. I use a financial advisor, so I don't know why anybody else doesn't.
Are you serious?
I'm serious. Somebody from my team, I've tried telling outsiders, saying pitch. If I like you better, I will actually give you the business because I can't manage. There's a lot of emotional baggage that comes. Yeah, I know what to do but the day when it comes, I'm busy, I can't do anything. Then I say, okay, now on the wrong day, I will take that action. So,
I hear you, Lovaii. I'm a chartered accountant and I have another CA. I hire a CA for filing my tax returns. I hear you loud and clear.
I think spend your time in whatever your core area is and outsource the rest is what I believe.
What a great takeaway to wrap up this episode. Folks, focus on what you love doing and give everything else to a specialist. Did I get you right on there, Lovaii?
Yeah.
Folks, on that note, that is a wrap on this episode of Paisa Vaisa Advisor Perspective Series number 1. Remember, these are longer episodes with deeper conversations to help you make better decisions and also to introduce to you the basic principles of financial planning. That's a wrap on this episode. My guest, Lovaii Navlakhi, founder, CEO of International Money Matters. Lovaii, thank you so much, and especially for coming here in Bombay from Bangalore and giving us your time for doing this episode. Thank you so much, Lovaii.
Loved it. Thank you so much.
Thank you for that. And folks, listeners, thank you for listening to this episode of Paisa Vaisa. If you like this podcast, don't forget to check out other interesting podcasts on the IVM network. You can listen to us on the IVM podcast app or ivmpodcast.com. You can also follow us on our social media. We are IVM Podcast on Twitter and Instagram. If you want to reach out to me, I'm your host Anupam Gupta, B50 on Twitter. And folks, thank you so much for listening to Paisa Vaisa.
No material on the show should be considered as financial advice. The material on the show is for informational purposes only. Please consult a financial advisor before taking any investment decision.